Welcome, students. This is Professor Stacia Ashmore, and I am here today with Dan McDorman. He is a mortgage loan officer, and he's going to tell us a little bit about what he does and how the business works. I actually have some interview questions for you, so I'm going to kind of read off of what I said. That way we both know where we are.
I'm ready. Hi, y'all.
All right. So, Dan, tell us a little bit about yourself, how you decided to become a mortgage loan officer, and a little bit about the process of becoming a loan officer.
I have been in the mortgage industry in Austin for 15 years. What initially attracted me to the mortgage business is because I came to the realization that people have to have three things to survive. I mean, they have to have food, you have to have clothing, and you have to have shelter.
True enough.
And being in the food industry, yeah, working.
Not so much.
Yeah, okay. Yeah.
Okay.
It's a perishable commodity, and clothing. I mean, unless your last name is Hilfinger, I think you're out on that one. But shelter, I'm like, okay, everybody has to have a place to live, and there's so many different areas, and from appraisers to the title company to the realtor to the lender, underwriting, that all these things have to work in unison for somebody to buy a house. There has to be a place in there for me.
So why lending?
Of course, the number one answer for everybody is I want to help people, right? I mean, I want to help people realize their dream of home ownership, and okay, whatever. But a challenge, I mean, because there are no two mortgage transactions that are the same. And there's always going to be some sort of challenge, some sort of obstacle that on the back side, on the back end, the client never knows about it. Mm-hmm. The realtor sometimes knows, yeah. Mm-hmm. And we're, as a loan officer and the processors and underwriting, we're freaking out. It's like, okay, this is not going to happen. We've got to make this happen. And then we get it done, and it's like, okay, that was awesome.
And it's very rewarding.
Yeah.
Yeah.
I mean, it's a challenge.
Yeah,
That's good.
I understand that.
Mm-hmm.
All right. So how do you market yourself, or where do your clients come from?
Goodness, referrals.
Number one is referrals?
Absolutely.
Okay.
Relationships are the most important thing that you can do in this industry. Mm-hmm. With your title company, with your lender.
So you hang out at realtor events is where you might meet a lot of. I mean, that's how I met you, was at a realtor event. I know.
Oh yeah, you have to do those things, and they're fun.
They are fun.
I mean, realtors like to have fun.
Yes, they do.
It's a tough job, and it's stressful, and it's good to get out and to socialize and compare stories and
networking.
Build those relationships. Mm-hmm. Definitely. I mean, you have to have them.
Well, my students here at ACC, we are using a forum called Blackboard. That's where our classes are held online. And then we have the ACC Real Estate Club, and we generally have a real estate broker that comes out once a month and talks to the students about what they can do to jumpstart their career in real estate, what kinds of questions to ask of the broker that they might be working with in the future. So we don't really have a lot of activities where we have mortgage folks come in, because right now these folks are working on getting their businesses up and running. Mm-hmm. And one of the classes I teach is real estate finance, and I think that they have to understand the process. And you partner with JB Goodwin, and I know that you have new real estate agents that come through a session with you. Tell us a little bit about what you tell them in that session.
Rule number one is you can spin your wheels, and we're not here for practice. And you practicing showing homes is not going to make you a living. And it's my job to get you paid, and that doesn't happen until you sell the house, until it
closing
closes.
And funding.
Until it's closed.
Until it's funded, it's not a done deal.
Then you get paid. Have your clients pre-qualified. Make sure they're pre-qualified. Even if they say they're pre-qualified, ask them who they're qualified with. I mean,
Is there a difference between a pre-approval and a pre-qualification?
There is, and that's And that's a big deal. We do a lot of pre-qualifications, especially like on the weekends, on Saturday, on Sunday at 9 o'clock at night, where I don't have their tax returns, I don't have their bank statements, I don't have their check stubs, but based off of the information that they give me, we can run it through our automated underwriting system, and it will come back and say, okay, yes, here are likely conditions.
Assuming that everything they told you is correct.
Within 30 minutes, I mean, we can send out a pre-qualified, a pre-qual letter to them, to the agent, to the selling or listing agent, and that way everybody knows that your clients are qualified. Now, a pre-approval is when I've got their income tax returns, I've got their bank statements, I've got their check stubs, and it's actually gone through underwriting. Underwriting will more than likely come back with a condition. I mean, of course, we have to verify
The property.
employment, all title, all that, but.
And then the property also has to qualify.
Exactly. But when you're making offers, on behalf of your client, a pre-approval is worth its weight in gold.
It is.
You're going to have people that are pre-qualified
But-
that can't actually buy that house.
Right.
And that's the worst, because then the sellers are mad, the listing agent's mad.
And the
Everybody's
listing agents, what do you tell them?
Look for a pre-approval.
Not a pre-qualification
Exactly.
letter, a pre-approval.
Pre-approval letter
Okay.
is definitely, it's worth its weight in gold.
All right, so
I'll
another
come to
quick question for you here.
Mm-hmm.
Tell me a little bit about what types of programs are available for low income or for credit challenged folks. Can you still get them done?
There are programs, and one thing to be careful of, I don't want to say false advertising, but there are programs out there that you can get somebody financed that, well, they can buy a house that has a 500 credit score. But they had to work pretty hard to get to a 500 credit score. Didn't happen overnight. It takes effort. They better have a lot of cash and a ton of cash.
So if you have bad credit, you got to have lots of cash.
Exactly.
If you don't have much cash, you better have good credit.
Exactly.
Okay.
Yes.
So if you have both, you're golden. But how many people do we see that have both?
Yeah.
Not as many.
Yeah, not so
And the
much.
thing is, everybody always wants to buy at the very top of their price range.
Oh, absolutely. Yeah.
So you're
And-
always maxing out it never happens where I have a client that says, we qualify for a $500,000 house, but really we'd like to keep it around $250,000. I would love that.
Yeah.
I don't think you can even buy a house for $250,000 in Austin at the moment.
No.
But yeah, I'd love that.
No.
Most of the time what I get is someone who qualifies for $200,000
And they want to
telling
buy
me that they want a
3D
house that's on 5 acres
Mm-hmm.
with a pool, but they really don't want to spend more than $150,000.
Yeah. Yeah.
Sure, why not?
Get that done.
If we're dreaming about it,
Uh-huh.
let's just go for it.
Exactly. Yeah. Set realistic expectations and goals. Help them with that, because
But
Yeah.
there are some programs out there I know that have down payment assistance
do.
programs
They're-
and USDA,
Mhm.
and there are certain qualifications from my understanding, and correct me if I'm wrong, but for example, in certain counties like Hayes County and Bastrop County and some of the outer lying areas are qualifying for certain USDA types of loans
Absolutely.
because of where they're located. So it
Absolutely.
isn't always just the borrower that can qualify a loan, it's also the property.
Absolutely. Property. There are even some places in Williamson County as well, even Leander right now, and it's as simple as look up the address, and we're talking about USDA. Government backed, zero down. They want you to buy these houses. But it's super simple. Put in the address and it will tell you whether it qualifies or not. But, there are...
And this criteria changes all the time.
Absolutely.
I know lending restrictions and lending guidelines change every, 15 minutes? 20?
About that, yeah.
And tell me a little bit about interest rates as well. So, for example, a question would be, what difference does, say, a half a percentage point make when you are qualifying someone on a loan? How much difference in monthly payment can a half a percent make? It doesn't sound like much, but it can make a difference on the amount of a house you can actually afford.
There are so many variables that go into that. Depends on the loan amount, debt to income ratios, loan to value.
Credit score.
Yeah, so many different
obviously,
things.
the higher your credit score is, the lower the interest rate that you may qualify for.
Oh, absolutely.
Other factors also taken into
Absolutely.
consideration.
One of the things about interest rates, I bought my first house when I was 21, and I believe my rate, I want to say it was 14.
Wow. I think my first one was 9%.
Yeah, it's, of course, at the time that was pretty decent. And right now, interest rates are as low as they've ever been.
And they have been for a while.
Oh, absolutely. We in December, we saw a slight increase. We're expecting sometime around March.
And if you get the kind of emails that I get, it's all, the sky is falling, because the interest rates are going up.
Mode,
We're
right.
never going to be able to sell houses again. It's not
Exactly.
true.
Panic
It's
mode.
not true.
It's not going to make that big of a difference. It's cheaper to buy a house than it is to rent, if you qualify. That's the thing. But we have, so many different loan programs that are available from FHA, USDA, conventional loans. But we do 30-year fixed-rate mortgages. The days of adjustable rates,
Oh yeah, you don't see those very
ARMs,
often.
those kind of things are that's a thing of the past. Homeowners are the most protected people in the United States right now. We have to make sure, from a lending standpoint, that they can afford that house, that they're not going to get up and walk away from the house, that if they do get in trouble, that they're going to have reserves, they have the capacity to pay for the house. It's super, super important because of what happened in 2008. We want them to be able to qualify. Down payment assistance programs, there are several out there, from TSHAC to South to TDHCA to LIFT, a grant program here in Austin. It's a grant.
Is it for certain areas that they're trying to regentrify?
Depends on the program.
Okay. Because I did hear something about that.
Right, depends on the program. But as a lender, we want to put those people in the house too, and so
But
we're
you
going
wanna
to
make
look
sure they
at
can qualify.
we're going to look at all those programs and see, and if you find a good lender, they're going to do the same. They're going to, because if your client doesn't have the reserves, it doesn't have the down payment, we're going to look for a way and try to figure out a program that they'll fall into where they can buy the house.
Right.
So anyway, it's
So the American dream is possible
very much so.
for almost everyone.
Very much so.
My last question for you, and I know that I've kept you a lot longer than I asked you to be here, but this question just came up in my mind because of loans that I have had in the past that didn't go through or that took way long to get through. Your opinion just quickly on the impact of student debt on the home process. How often do you come across student loans that are interfering with a buyer's ability to purchase? I hope you say not very often.
It's pretty
but we're
rare.
seeing it more and more
Right.
across the board. And I've been hearing things and just wondering from the real world aspect what
Right.
you're seeing.
It's pretty rare that that's going to keep. Of course, it's figured into the debt to income ratio.
Right.
But we're allowed to use a percentage of the total amount that they owe versus, like, yes, you're paying, or this is in deferment, but
It's still there. It's
is.
going to be
and it's got to be
coming
repaid.
due at some
Yeah,
point.
you can't get away with it. If they are in deferment or even in default, there are a couple of programs through the Student Loan Administration where they'll get you onto a program to get you current. I want to say that it's over a 7-month time frame, and you make that payment, you're in good standing,
And then they don't count it against you as far as your credit goes.
Yeah, it's not going to show us a collection account.
Yeah.
Which is bad. But
Well, I know that there are a lot of credit repair type companies out there, and you, yeah,
be very careful.
that's where I was going with that.
Yeah.
You really need to know who you're working with and make sure that you're getting sound advice.
Absolutely.
But if you have a client who is credit challenged, don't despair. Within usually 6 to 8 months, they can get most things taken care of. But they have to work at it, and they have to be committed to doing it. So, number one, make sure you know who you're working with. And number two, make sure that your clients are committed to doing what's necessary to get their credit repaired.
That's a big thing.
Don't let them in your car until
No,
you've got
do
them
not.
pre-approved.
Do not. Real estate and realtors, I know a lot of realtors. I've seen the upsides, I've seen the downsides. I've never sold a home. And I've been to a lot of open houses, and I've been to a lot of closings. I've never sold a home. And to see, the anticipation where I've got a listing appointment, for a $620,000 house, and know everything about that house and impress those people. And that's,
Right.
that you have to be on your game. And even also when you're showing houses. I couldn't be a realtor, but I've seen the triumph of, closing, for a $900,000 home, and I've also seen, the faces of my agents when, they lose, a $300,000, house or even a listing appointment, or they make offers on a property, and and the sellers chose somebody else.
Yeah.
And it's heartbreaking. And it's like, so as a lender, I want to do everything and make sure that your lender is doing everything to give you the advantage, to give you the edge. If they need to make phone calls, we do live videos, and we'll send that to the listing agent or to the selling agent, and say, okay, hey, I just spoke with the Johnsons. They're well qualified. We've already gone through desktop underwriting. They have the resources. They would be a perfect fit for this house, and they're so excited. If you have any questions about it, let me know. I want to see y'all successful, and enjoy this. It could be the most rewarding thing ever to hand somebody the keys to a house. But yeah, do your homework. And build relationships. Have two lenders
That's
that you
what
know.
this is all about. Yeah. And I generally do, when I work with a buyer, the first thing I do is get them qualified. Make sure that they have a pre-approval letter, not just a pre-qualification letter.
Absolutely.
I want to make sure that their income, their credit, everything has been verified so that we don't have any surprises.
Absolutely.
And that still doesn't guarantee that there are no surprises.
Sure.
But at any rate,
We're
I
here
thank you so much,
Fix those and
Dan.
keep them to a minimum.
Right, exactly.
Yeah. Well, yeah. Thank you all. It's good to be here. Good luck to you all. The future is bright, and the housing market it's not going anywhere. But
In Austin, yeah.
we are in a corridor that is going to continue to just grow and explode over the next 15 years. So.
Most likely. Well, you know that Austin Business Journal quotes that there are 154 people per day moving to the Central Texas area, including Austin, Leander, Cedar Park, Round Rock, Pflugerville, surrounding areas.
Wow.
154 people a day.
Food, clothing, shelter.
Exactly.
That's it.
Thanks so much,
Awesome.
Dan. I
Thank
appreciate
you.
it.
You bet. Thank you all.